let's put the spotlight actually on holding companies. These companies will be in focus given the fact that you had SEBI that floated a consultation paper on voluntary delisting norms last month. But what does this have? What the impact will be on the holding companies, and what can we expect going ahead, and what does it mean for you if, as an investor? Let's bring on board my colleague Soumeet to actually explain that to us. And Soumeet, yes, holding company, one topic a lot of us know least about. If you could first shed your light on what are holding companies, what's the importance of holding company, and then let's follow on with what SEBI consultation paper is.
So basically, a holding company is a company which owns controlling interest in other listed companies. Like for example, there is Kalyani Investment, which is listed as a promoter in Bharat Forge, Haikal and BF Utilities. So that's what a holding company is basically. Now, what does this new paper tells us about? So I'm reading it through this because it's too complicated and just for the benefit of viewers and given the fact that there should not be any ambiguity here. So what does this paper say? Now SEBI had floated a consultation paper on voluntary delisting norms on August 14. Now this paper was open for comments till September 4th, and now given the fact that it has the comment part is now closed, the final paper could come in the next few weeks or a couple of months there, but it will come out, that's for sure. Now the final paper from SEBI will have the proposals listed in this draft consultation paper, but not necessarily it will have all the proposals that were there in the draft paper, but most of it should be there given the fact that it was floated by the side of SEBI at first. Now, what are these proposals and why we are speaking so much about this? Now, there's a proposal on the new delisting norms for delisting of investment holding companies. That is the holding companies that we were just mentioning, like Kalyani Investment. Then there is Bombay Burma also, which has stakes in Bombay, in Britannia as well. So these are the holding companies, and there is a proposal given for delisting of these holding companies. Now, what does this proposal say? Now, this proposal says that the holding companies can get a share of the company in which they have an investment. In this case, if Bombay Burma has an investment in Britannia, they can get Britannia shares. Kalyani Investment has investments in Bharat Forge, BF Utilities and Haikal. They can get shares directly in these three companies.
This is by default. You will not have to ask approval of the board.
So yeah, earlier there used to be two things. Now if a holding company wants to issue shares of the other listed company, then they had to take permission of shareholders of Bharat Forge as well. So, say for example, Kalyani Investment wants to give the public shareholders of Kalyani Investment the shares of Bharat Forge, then they have to take approval from Bharat Forge public shareholders as well. But this proposal, if it gets approved the way it was said, then they did not to take any approval from Bharat Forge shareholders. The approval is required only from the board, from the shareholders of Kalyani Investment, public shareholders of Kalyani Investment, by passing a special resolution, and from NCLT, which is most likely to go through. These three approvals are most likely to go through, but the board has to approve first. So what does it say is that these listed holding companies are to be given shares of companies in which they hold stake. Now this will be done provided they derive nearly 75% of their fair value from their investment in these listed companies, and shares will be given in the proportion of holding company share. Now this is the second most interesting part, and this is the reason why we are more talking about this proposal that has come forward. Now for example, if we consider Chola Holding is a listed company and they own shares in Chola Finance. Now Chola Holdings, if you see, the total outstanding share base stands at around 18.8 crore shares, and Chola Holding has around 45.3% stake in Chola Finance. Now Chola Finance total outstanding share base is around 82.24 crore, but Chola Holding has around 37.3 crore shares in Chola Finance. Now to put it very simply, Chola Holding has a equity share base of 18.8 crore and they own around 37.3 crore shares in Chola Finance, that is the other listed company of the year. So based on these number of shares, the shareholding ratio or the proportion on which they will be given Chola Finance shares will be for every one share of Chola Holding, the shareholders will get 2 shares of Chola Finance. That's how it goes, because they have an outstanding base of 18 crore and they own 37 crore. So it's double. Hence they'll get 2 shares of Chola Finance. Now why is it interesting? Because the discount, if you see, for Chola Finance, Chola Holding 1 share is costing you 1000 rupees, and if you get 2 shares of Chola Finance, that is 1000 rupees each. Exactly, the value doubles for them. And that is the reason why we are talking about it, and that's the reason why it is interesting. But will the promoters do so? Because it is finally, this proposal has to come from the board side, and then only you will go for NCLT approval and shareholder approval. So there are less chances of promoters going ahead with this, because firstly this is an option of delisting, right? There is no compulsion for them to do this, and they will most likely not do this, because if suppose Chola Holding public shareholders get more shares in Chola Finance, obviously the promoter holding is expected to dilute. So that will give them less controlling stake in the main company. So less likely they will not do so. But what Macquarie's sales team believes is that this could at least lower the holding company discount that we are currently seeing.
Right.
Because if you see these holding companies, they are trading at a discount of at least more than 50%. So this could further come down going forward, because there is now this option where the public shareholders of the holding company can directly get shares of the listed company. So that is why it is interesting.
Right, but for investors, it will be a win-win, isn't it?
For the holding company investors, obviously
yes.
it will be a win-win. Not necessarily for the companies in which they will be getting shares, because for them the stake for minority shareholders also there will be a dilution because new shareholders will be coming in.
Right. So basically, this is just a consultation paper for now. We are yet to get
final approval
is yet to come in. But yes, it's an interesting development.
Because if you see the Kalyani investment, for example, that we were talking about, that's trading at the value of Kalyani investment is at an 87% discount compared to the value of the stake in the listed companies for Bharat Forge, Hykal, BF Utilities.
In fact, I'll ask Abhishek to actually show the line graph of Kalyani investment as well as Bharat Forge to actually kind of understand what point you're trying to make, the discount that Kalyani investment is in compared to Bharat Forge. So in that way, you will be able to understand better. So Kalyani investment currently trading at around 2,600.
But that's not how we should take it. We should look at the market value.
Market value.
The market cap of Kalyani investment is close to 1100 crore rupees. But it owns stake in Bharat Forge, Hykal and BF Utilities.
Right.
And the combined value of the stake is 8,600.
Right.
Or we can just look at the companies like Kama Holding. Now it has only one investment, and that is in SRF. Kama Holding is the promoter company of SRF, and Kama Holding's market value at this point is close to 11,000 crore rupees, while the value of its stake in SRF is 36,000 crore rupees.
Right, understood. Yeah, so that's the way how one
70% discount. So that could narrow according to Macquarie's sales team. So let's see.
But Soumeet, other than the couple of examples that you highlighted, are there any other interesting holding companies that has come on your
There is a list of it. There is Bombay Marba, there is Pelani, there is Zuari Industries. These companies are trading at a discount of nearly more than 80 to 84%. Then there is Bajaj Holdings as well, which is trading at a discount of 47% to its value. Maharashtra Scooters, which is trading at a 61% discount. Then there is TVS Holding, which is trading at a 68% discount. Chola, I was talking about Chola Holding, has investment in Chola Finance, and that is trading at a discount of nearly 54%. There are many companies that is there. There is Tata Investment as well. So a host of companies that are present in front of us, which are trading at a deep discount. And currently they should trade at a discount because there is no scope of the promoter companies selling these stakes. So there is no way to monetize them, and that's the reason they trade at a discount. But given the fact that now there is an option for these minority shareholders to get a share in the main listed company, the holding company could come, discount could come down.